All right, good morning, everybody. Welcome back to another live stream here on Facebook and over on our YouTube page. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, you're all doing well. Good morning, Jay. Seeing you here bright and early. Thank you for tuning in here today. Before we go ahead and get started, let me just know that you guys can hear me in the chat or in the comments section, depending on which side you're on. We just want to make sure everybody has an enjoyable experience. So let me make sure that you guys can see the video clearly. The audio is coming through for you. Just make sure we have confirmation of that, and then we'll go ahead and get started. While we're waiting on confirmation for that, as always, if you're brand new here or if you've been here for a while, doesn't matter. First off, welcome. Also, make sure if you enjoyed today's session, smash that like button both over on Facebook and YouTube. That all helps us out, doesn't cost you a thing, and just helps us get in those YouTube algorithms and Facebook algorithms to spread the knowledge on how you can become financially independent through the use of the stock market. So if you haven't done that already, go ahead and do that. Also, if you're over on our Facebook page, you want to hit that share button on the right-hand side, feel free to do that. That also helps out and spreads the video through the Facebook algorithms as well. All right, so today we're going to be looking at clean energy stocks. As always, we're going to be utilizing the VectorVest system through all of the analysis here. And for anybody new tuning in for the first time, before we jump into that, we'll start to take a look at what's going on in the market here today. Then we'll dive into the clean energy stocks. And then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds utilizing the Stock Advisory app. So if you have stocks that you want to take a look at, make sure to stick around towards the very end and we'll analyze those for you there. All right, so jumping right into it here today. As we can see right now, we are one tick into the green. Therefore, the market is mildly bullish and VectorVest advocates caution when buying stocks at this time. As we mentioned last week in our prep guide for looking for a bottom, we're looking for that first green light in the price column specifically to know that it's a good time to start trickling back in for the upside of the market. So we'll scroll down, take a look at the color guard and see if we have that. As we can see, we have two green lights within the last week showing up in the price column. Now today, that green light that we see in the price column needs to be confirmed by the end of the day action to make sure that we finish off with that. So we have a possibility of finishing off with a green light in the price column here today. But as always, we need to see the market finish off like this to get that official signal. But we did have that green light on October 12th. So therefore, that would have potentially been a decent day to maybe add a position or two back into your portfolio based off what we talked about last week. Now, if you missed out on last week, that's fine. You can always go back to the replays and watch the whole entire thing over. You can stop it, fast forward it, take notes, whatever you want to do, all can be found there. It's always going to be saved and recorded for you. Okay, so getting into the color guard here today, as we can see, that green light showing up in the price column, the price is based upon the VectorVest composite. Now, the VectorVest composite, for anybody brand new to this, is an arithmetic indexed average of about 8,800 stocks in the US market. And this gives you a better representation on what's actually going on in the market, because it's not just looking at the Dow's 30, the Nasdaq's 100, or the S&P's 500, but it's looking at 8,800 stocks in the US market. So, as we can see, that green light definitely is something that we want to pay attention to here today. Hey, appreciate that, Judy. Thank you for the star there. I appreciate that. Everybody over on Facebook, show Judy some love. Thank you for the stars once again. Thank you. Glad you're here today. So after the price, the next indicator we want to look at is the RT or relative timing. Now the relative timing is cast on a scale of 0 to 2, and above 1 is good, below 1 is bad. So right now we have been well below that level of 1 for the last few weeks, but we're starting to see it pick up a little bit, but unfortunately not enough to get us back above that level of 1 for right now. So therefore, the short-term trend of the market is still going to remain down for the time being. But, if things continue to move higher, we could see that turn back into the green very, very soon. And then last but not least, we're going to look at the buy to sell ratio. The buy to sell ratio is looking at the overall health of the market. It gives you a good idea of where the market is, how strong is it, do we have strength to continue to move to the upside, or are we seeing overall market weakness to the downside here? So right now it's sitting at 0.99, right below that level of 1. Could potentially, if we see the markets continue to run here today, could potentially turn that back above the level of 1, but we'll have to be patient and wait and see. But for the time being, because it is slightly below 1, we do see a little bit of weakness in the overall market. Now, the buy to sell ratio, for anybody that's not familiar with this, is looking at the number of buy rated stocks in the database, the number of sell rated stocks in the database. Every single day, VectorVest gives a buy, hold, and sell rating on every single stock every single day. And we just look at the number that have the buys and the number that have the sells to get an idea on whether there's more buys and sells or more sells and buys. And that helps us identify the health of the market here. And then these three indicators are, well, the average of these three indicators are comprised to come up with the MTI, or the market timing indicator. It's cast on a scale of 0 to 2 once again, and above 1 is good, below 1 is bad. The MTI is looking at more of the underlying trend of the market. So if it's above 1, the underlying trend of the market is up, and below 1 would indicate the underlying trend of the market is down. At 0.96, we can see that the underlying trend of the market is still slightly lower than where we'd like to see it at. Also, good morning, Rick, Dale, Matesh, Wendell, Mark, Steven. Hopefully you guys are all doing well. Good morning, Joel, Seth, Judy. Hopefully you're doing well. Once again, thank you for that. Jay, Wahid, Maplewood. Good morning, Nadia. Hopefully you're doing well. Eric, JJ, Julian. Thank you guys for all tuning in here today. Glad you guys could join us. Over on our Facebook, or excuse me, over on our YouTube. Thank you, Jack, Terry, Energy, VP, Robert, Mark. Glad to have you all here. Hopefully you guys are doing well this morning. All right, so now we've looked at that. As we can see, the trend column, getting back into the overall market timing for the time being, the overall trend is an up-down situation. What that means is the first part is looking at what we like to call the primary wave, which shows the short-term or simply weekly trend of the market. As we can see, it's up since the price of the VectorVest composite is higher than it was 5 trading days earlier. The second part of the trend is looking at the underlying trend, or just simply looking back at the MTI. So since the MTI is below that level of 1, the second part of the trend column is going to remain down. And then last but not least, the last column we get here is the calls column, which stands for our confirmed calls. And our confirmed calls are our most conservative timing system we have here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out. As you can see, we still remain in that confirmed down situation as of today. It's going to take more up movement here to change that down situation back to an up situation. Hey, Mohammed, tuning in from Vancouver, Canada. Hopefully you're doing well this morning. So looking at the advanced to declines, because we have a green light in the price column, so therefore we definitely want to take a look at the advanced to declines to see if we get confirmation that today could be a day that we could enter into a stock or two. What we're looking for when we look at the advanced declines on a daily basis is a 2-to-1 bias at minimum. So if the market's moving higher like it is now, we want to see twice as many stocks moving up than moving down. And right now, about 69% of stocks are moving higher, about 20% of stocks are moving lower, clearly over that 2-to-1 ratio, more of closer to the 3-to-1 ratio. Therefore, if you need to be buying a stock, you're a little bit more aggressive, don't want to wait for confirmation of the full green light by the end of the day. Maybe today's a day you start trickling in a little bit. Then as we scroll down, taking a look at the major indices, the Dow is up 1.4%, Nasdaq's up 1.5%, S&P's up 1.4%, VectorVest Composites up about 0.1% so far. Major indices holding in there pretty strong so far. Here in Palm Desert, California. Palm Desert's a gorgeous area. Last time I was there, it's been a few years, but I absolutely love Palm Desert. Hopefully you're doing well, Robert. Thank you for tuning in here this morning. I know it's 11, so it's probably a little early for you, but glad to see you're here today. Good morning, Bob. Good morning, Cigar. Glad to have you guys. All right. So right now, things are looking pretty good. The market's going higher. We see a nice steady uptrend starting to form. We're starting to see those green lights appearing like we talked about last week. That's what we're really looking for to start entering back into the market. Now, when I say start entering back into the market, I want you to understand that's not saying, okay, now's the time to take all that free cash and go load it in. Oh, apparently I got a text message. Load it in to all long positions. It's simply stating that, maybe now is the time to add a position, maybe 2 positions, and slowly trickling yourself in. That way you minimize some of your exposure to the risks in the market, but you're also capturing some of that upside move, and allows you to feel a little bit more confident, more comfortable in your positions, knowing that, hey, if we got in a little early and that position doesn't really take off right away, it's not going to destroy our portfolios. Good morning, Jeff. Hopefully you're doing well. Adamar, as always, if you want to see the analysis on that, make sure to stick around to the very end, and I will definitely analyze any stock that you guys want to take a look at in 10 seconds or less. Appreciate that, Liddy. Hopefully you're doing well. Glad you could be here today. All right, so let's go ahead and jump into the clean energy stocks. Yesterday, Plug had a huge update on some analyst upgrades, if you will, and we're going to take a look at the industry as a whole. So as always, before we jump into it, this does require the premium version of the stock advisory app. So everything that you see here today is included in just the premium version. All right, going into the premium list though, we scroll down. Any one of these that you see that has that little Facebook symbol comes from these live streams that we do here on a weekly basis. So the marijuana stocks was done on the 21st of January. So if you want to go back and watch the original recording of when we came out with these stocks, you can go back and do so. Same as the clean energy stocks that was done on the 28th. Let's go ahead, tap on it, and take a look at some of the stocks in here. A lot of these are going to be names that you guys are most likely familiar with. So AM, First Solar, SEDG, SunPower, REGI, Canadian Solar's in here, Jinko Solar is in here, Plug is in here, Fuel Cells in here, Extro is in here. There you go, Jay. Hopefully that one was for you. Hopefully you enjoyed that one. Something's wrong with my screen. I see green everywhere. I know, Bob. It feels weird, doesn't it? All right. So as always, whenever you see a watch list inside of VectorVest, we do all the work and you get to reap the profits from it. We automatically sort these stocks to bring the best candidates to the top and the worst candidates to the bottom, utilizing our master indicator VST, standing for value, safety, and timing. 2 out of the 3 parts of VST are fundamental analysis, 1 part is technical analysis, and that's what makes the VST rating so powerful, is that it's the only system out there that I've been able to see over the last 20, 30 plus years of investing that combines both fundamental and technical analysis all into one. So when starting at the top, we get AM coming in here, and we'll go ahead and pull it up. We'll jump into some of these stocks and take a look at some of the bigger names here today. So AM, name that maybe you're not familiar with, not one of the more commonly talked about stocks from the clean energy sphere, if you will. But then we get to the analysis down here at the bottom. You get these 4 indicators, and all of them, once again, are going to be cast on a scale of 0 to 2. So above 1 is good, below 1 is bad. Coming in, somebody's coming in. Hey, appreciate that, Jay. Thank you very much for the stars. Everybody, show Jay some love in the chat. Thank you, Jay. Thank you for all your support here. I appreciate it greatly. So what we're looking at here is AM, starting off with the RV, the relative value. Relative value is looking at the long-term potential of the stock over the next 1 to 3 years. So at 1.3, that tells us this stock has really good long-term potential over the next 1 to 3 years. The next aspect is the safety factor. You know, how much risk is involved with this stock compared to the average stock out there? So if it's above 1, that would show less risk compared to the average stock out there. Below 1 tells us that there is more risk involved. Well, since the clean energy sphere is more of that early phase rather than that fully developed phase, you are going to assume a little bit more risk, which is why we see a RS rating of 0.86. So stock has good long-term potential, but to get to that long-term potential does come with a little bit more risk involved. Want to make sure we're all clear on that. And then the third indicators I was talking about, 2 are fundamental, 1 are technical. The RT is the relative timing or that short-term price trend of the stock. Since it's cast on a scale of 0 to 2, above 1 shows the short-term trend is up, below 1 would show that the short-term trend is down. Now, the thing that makes RT a little bit more powerful than your average indicator out there, your typical technical analysis, is it doesn't just show, an uptrend or a downtrend, but it also shows the magnitude of that move. What I mean by that is since it's cast on a scale of 0 to 2, above 1 the closer to 2 it is, the stronger the uptrend. Below 1 the closer to 0 it is, the stronger the downtrend. So at 1.22, this stock has a nice, steady, consistent uptrend currently. So all 3 of these are combined to come up with, once again, that VST vector rating. And since it's above 1, that shows the overall analysis of the stock is good, has good long-term potential, does have a little bit more risk, nice steady uptrend, so definitely a favorable stock. Now, one thing to keep in mind is we've talked about investor sentiment and investor profiles before. Knowing that the RV is greater than 1 and the RS is below 1, we want to keep that in mind and know that if you're an aggressive investor, this could be a good play to keep an eye on. If you're somebody who's more prudent to conservative, you may pass on this one for the time being. Hey, welcome, Richard. Thank you for that. Only 3 stocks with above 1.0 RS. Yeah, and that's the thing that's what I was talking about there a few moments ago, Bob. Because the clean energy stocks are more in their infancy stages. They're really starting to catch wind over the last year or two. There's still a lot of upside potential, but because they're so young still, you are going to be assuming a little bit more risk than the average stock out there, because they still have to have that consistent proven track record to show that they can generate money quarter over quarter, year over year, and that would indicate that less risk aspect of it. But I like that point. Thank you for pointing that out. All right, so we see that good stock, more aggressive, but has a nice steady uptrend. We go take a look at the graph. You see a nice steady rise from bottom left to upper right. That's exactly what you want to see when you're getting into a stock. A lot of people like to buy stocks when they're moving lower, assuming that they're buying them for cheaper than where they previously were, but there's a flaw in that logic. Lower is all relative. And what you want to do is you want to buy stocks that are moving in the direction that you want them to move previously, so that way you have that consistency to have the probabilities on your side. So when you see this nice steady rise from bottom left to upper right, it shows that the stock is making money, it's moving higher, and that's what you want to do when you get in. So you want to buy stocks that exhibit that pattern previously, so that way they have a higher probability of continuing to do that. There's an old saying out here, I haven't said it in quite a while, but there's an old saying of buy low and sell high. I prefer the saying of buy high and sell higher. So that's what we're looking for with this one. Getting into the next one, First Solar. As you can see, a little bit more volatility. Definitely had a pretty big sell-off from about the beginning of the year up until about midsummer. And that's due to the fact that we didn't really get a whole lot of news on the infrastructure bill that a lot of people were banking on for these stocks that was making them run coming into the beginning of the year. And so you did see a sharp sell-off with these, but now starting to resume that uptrend as Congress is starting to get back on track. We're starting to see potential hope of new information coming out of the infrastructure bill, how they're trying, what they're going to approve, what they're not going to approve. You're starting to see a revitalization in these clean energy stocks. And that's what we're seeing with First Solar. So you just broke above from a technical perspective. You just broke above this high here, which is definitely a good sign. Let's see if, there we go. Broke above there yesterday, getting follow through here today. That is what you want to see. Obviously, you want to see volume picking up a little bit more here today, but overall, that is a solid move. And maybe if you're wanting to jump on board, wait until you get closer to the end of the day to make sure that that volume is confirming this, this breakout. Or if you're a little bit more aggressive, you want to jump in now. That's your choice there. But there's 2 different approaches you could take to it. All right, let's go ahead and analyze First Solar now. So First Solar has average long-term potential, a little bit better safety than what we were seeing with AM, but still below 1, telling us that it is more risky than the average stock out there. But we look at RT. RT is definitely winning out of the first 2. RT at 1.35 starting to show that it has a pretty strong uptrend forming, and you want to see that continue as well. So overall, because of the momentum, that definitely helps the overall factor of the stock, therefore making it favorable for the time being. Let's go ahead and analyze some of the other bigger names here. So REGI was another very popular name. You can see the chart. Once again, you saw that sell-off coming in from January, February this year until about the middle of summer. This one never really seemed to have recovered so far. See lower highs, lower lows. And this is why we don't really look for stocks that are, moving lower. We want to find stocks that are exhibiting the patterns like we noticed with AM, the higher highs, higher lows, the nice bottom left to upper right, and not one of these that's upper left to bottom right. If we come down here, let's take a look at some technical analysis real fast. So if we come in and let's go ahead and use DPO. DPO, for anybody not familiar with it, is a momentum indicator. So it can be great to identify potential reversals. Oh, let me go ahead, close out of here. Oh, pull that back up. Got to sign in. So DPO is great to show potential divergences, which could lead to reversals. And that's why we're going to look at it on this one here today. So get back into the clean energy, REGI. Go ahead, pull up the graph. And this is the part that I wanted to point out. I've talked about reversals quite a lot here over the years on our live streams. And what we're noticing here is the DPO, or that detrended price oscillator, which is that momentum indicator once again, is hitting a pattern of higher highs and higher lows as prices hitting lower highs and lower lows. That shows as the stock is moving lower, there's less and less momentum to the downside, which means that reversal is probable, or has a high probability of coming true as we move forward. Now, you don't want to try to front run anytime you see a divergence like this. You want to wait for some type of confirmation. Well, what could you use as confirmation? Trend lines. Let the trend be your friend. Maybe draw a trend line from the June high to this high here. Let me get my cursor here. Till right around the end of July. And then wait for it to break that downtrend line. And that could be your confirmation of when you should jump in if you're looking to get into a stock that's been beaten up pretty bad over the last few months. All right, so that was REGI. Jinko Solar, another very popular name. Looking at the analysis, poor long-term potential on this one, however, has a little bit more risk than the average stock out there. You're in a slight uptrend, not the greatest uptrend, but a slight uptrend to say the least. Overall, the stock is not favorable at this time. This shows that it is more of a speculative play, and at $50 a share, you better be right on that speculation there. Looking at the 1-year chart, same situation. We're noticing upper left to bottom right, where we want to see you guys buying stocks that are bottom left to upper right. Getting out of here, let's go to the next one, Plug. So the one that really hit the news yesterday, that was really the where the idea came from for today. Looking at this one, poor long-term potential, a lot of risk associated with it. However, even with the sell-off here today, it still has a short-term uptrend, a nice steady uptrend, but not enough to offset the amount of risk involved in this stock. So therefore, the overall stock is still not favorable, even with that big upgrade yesterday and that big move higher. Robert's coming in and saying, do you use VectorVest recommended stops listed in your charts, or do you use Profit Locker Pro longer term? So I love the Profit Locker Pro for more of my swing trades, so longer term trades. Day trades, as always, I stick with technical analysis for the most part, but I like having that Profit Locker Pro set up as a fail-safe or as a backup plan. But the VectorVest recommended stop that you see on every single stock is more of like a final line in the sand. So therefore, I try to avoid ever getting close to that point before I take my profit or before I close out of my position. The stop price is great for a longer term trade, but for the most part though, that is more of a warning sign or, a fail safe, if you will, rather than, a recommended stop price, because it's based upon a 13-week moving average. And as we've talked about when using moving averages in the past, you use a moving average to get in and you use a moving average to get out. You can't get into a stock not based off that moving average and start integrating a moving average into it, because then you're changing the rules of your plan and you're adding more things that you didn't account for originally. And you don't want to do that. You want to, plan your trade and trade your plan. So hopefully that answers your question there. All right, so there goes Plug. Let's see, last one we'll look at 2 more here for the day. So next is Fuel Cell, another very popular ticker that a lot of people like to see on a weekly basis. And looking at the quick graph at the top, you can see not the greatest look. Same thing we noticed with a lot of these other big names in the clean energy spaces. Upper left to bottom right, the big sell-off that hit back around January to February, and Fuel Cell took a lot of the brunt, or a lot of the blows there, if you will. Looking at the RV, poor long-term potential. Looking at the RS below 1, a lot of risk involved with this. Looking at the RT of 1.02, stock's basically flat, not really strong enough to really call it an uptrend, just moving sideways or treading water right now. So overall, stock's not favorable. But let's go ahead, take a look at it from a speculative play. You see the technical analysis. The technicals where the DPO at the bottom is hitting higher lows and higher highs as the price has been hitting lower highs and lower lows. So you do stand to potentially profit off of a reversal or off of a bullish divergence that we see here. But once again, use a trend line, let the trend be your friend, and wait for that confirmation to see the true breakout before ever entering in, because that bearish divergence could continue, or that bullish divergence, could continue to last for quite some time. And you don't want to try to predict when that breakout or that bullish divergence will actually come to fruition. You want to wait for confirmation and then take advantage of it there. All right. And then last but not least, we'll look at the last one on the list, Extro, just for Jay here today. Looking at Extro has poor long-term potential, has a lot of risk involved with it. There is a speculative play, no surprise there. Looking at the RT of 0.55, it is in a strong downtrend. We know that. But if you've been following Extro for a while, you know that there has been a lot of positive news. Once again, just more confirmation that their systems are working. Not the news we're really looking for quite yet. We're looking for more sales data, more sales news coming in, showing that the company has people that are buying their product and has potential buyers lined up. So that's what we're really waiting for to see the explosion with this stock. But so far, things are looking pretty good on the news side of things. Obviously, sales side, we're still waiting for that part. But overall, the stock is not favorable right now. It is a speculative play. It is in a strong downtrend. It hasn't been able to break that downtrend quite yet. I will say, on a personal note, not financial advice, if this stock gets to around $2, below that $2 level, I'm definitely going to be looking to add some more to my portfolio, that's for sure. What trend line settings are you using? Mark, so trend lines, there's really not settings. It's more of, trend lines are something you draw on the chart, more so than settings that you can use to automatically draw it. VectorVest can put some settings in there for support resistance, but not for trend lines. Trend lines are something that are more manual rather than something that can be pre-programmed in. All right. Looking at the graph, though, of Extro, same kind of situation. You do have a bullish divergence starting to form. You have lower highs, lower lows on the price action ever since about February. Whereas we look at the DPO, once again, that momentum indicator, you can see higher lows, not really higher highs, but it's not showing that that downtrend is as strong as what it was off that initial drop there. So I like the play. Hopefully we can see that bullish divergence come true sooner rather than later. Big Extro fan here too. Awesome. Glad to hear it. Yeah, Extro is one of the stocks that we've been, most of the guys in education here have been bullish on for the last year and a half or so. Still like the stock, just got to wait for that sales data to finally start coming in. All right. So that's going to do it for the basket. As always, if you have the stock advisory app, if you have the premium version, you can gain access to this every single day, no matter where you're at, as long as you have your phone or tablet with you and you have a connection, whether it be Wi-Fi or cellular. You can gain access and keep an eye on all these stocks at any time. So if you guys have stocks that you want to see analyzed, go ahead and start putting them in here. Let's go ahead and get those analyzed. And as always, if you haven't already hit that like button, make sure to do so. If you haven't hit that share button over on our Facebook page, hit that share button. All that helps me out. Doesn't cost you a thing. And if you're over on our YouTube, most likely you're already subscribed. But if you're not, I got to just throw it out there. Make sure to hit that subscribe button there. All right, so getting into it. We did have one coming in, DUK, a while ago. We'll go ahead and analyze it. If they're here, there you go. So looking at Duke Energy, starting off with the 4 indicators at the bottom. The RV, the long-term potential. 1.04 tells us it has slightly better than average long-term potential over the next 1 to 3 years. Then we get to the RS, 1.08, showing us it has a little bit less risk than the average stock out there. RT 1.03, slight uptrend, really just flat on the short-term basis more so than anything else. Overall, the stock is slightly better than average, not great. You need to see that RT pick up to at least a level of 1.1 or higher before I'd really start getting interested in jumping on board. Now, one of the things is Duke Energy most likely has some sort of a dividend. If we come down here, take a look. Dividend $3.94 a year. So dividend yield about 4%. Decent dividend to help you, offset some of these sideways moves. But personally, I like momentum stocks. Good stock, good dividend, but the momentum and the underlying asset still needs to see some pickup here, if you ask me. All right, so let's go ahead, take a look. HUT, good long-term potential. Does have a little bit more risk associated with it. Timing at 1.87, really, really strong short-term uptrend. So overall, stock's favorable. MARA. MARA. Good long-term potential. A little bit more risk associated with it, though. You have a nice, strong short-term uptrend. Overall, stock's still favorable here. Give me one moment here. There we go. Just adjusting something on my end. Perfect. All right. Where did I go there? All right. VEV. So is that a Canadian stock though, Energy, or is that a US ticker? If it's a US ticker, I'd be glad to pull it up. If it's Canadian, I can wait till the very end and I'll analyze that last. ARCB. ARCB, good long-term potential, less risk associated with this stock. You have a strong short-term uptrend, so overall, stock's definitely favorable here. SQ, good long-term potential, less risk associated with it. You do have a short-term downtrend. Overall, it's a good stock, just not the right time to be long in it. Let's see, OOV. Not finding that there. Mark, every single week you get me with that. You type in mug. I get why you're typing in mug, but I almost start to type in a symbol here. NXST, good long-term potential, less risk. You do have a slight uptrend below where I'd like to see it at, but slight uptrend nonetheless. Overall, good stock. I need to really see that RT pick back up to the level of 1.1 or higher there. Let's see. F, good long-term potential. Does have a little bit more risk than the average stock out there. You do have a steady short-term uptrend. Overall, stock's still favorable. Let's see, AMRS. AMRS, poor long-term potential. A lot of risk associated with this stock. It's in a steady decline. Overall, the stock is not favorable here. BYND. BYND, poor long-term potential. A lot of risk associated with it. You're in a steady decline. Overall, definitely not a good play right now. CRDL. CRDL, poor long-term potential, a lot of risk. You do have some steady short-term uptrend momentum behind it right now, but not enough to make the stock favorable overall. Let's see. VEV. Vicinity Motors. Okay. So VEV, poor long-term potential, a lot of risk. It is a smaller company, more of a speculative play. You do have a sideways, a slightly down move on a short-term basis. Overall, not a good stock for the time being. GM. Let's try that one more time. There we go. GM, good long-term potential, less risk associated with it. You have a nice steady uptrend. Overall, stock's definitely favorable. FLGT. FLGT, great long-term potential, a little bit less risk than the average stock out there. However, the timing is not the right time to be long in it. Overall, good stock, just not the right time on it. WIRE, good long-term potential, less risk associated with it. You have a strong short-term uptrend. Overall, this stock is definitely favorable here. Let's see, ZYXI. ZYXI, good long-term potential, but does have a lot of risk associated with that long-term potential. You're in a steady decline, so overall the stock is not favorable for right now. VMAR. VMAR, great long-term potential, but has a lot of risk to get that potential. You're in a steady decline for right now, so overall stock is not favorable. PIPR. PIPR, good long-term potential, less risk associated with the stock. You have a nice, steady, strong uptrend. Overall, stock is definitely favorable here. SRNE. SRNE, good long-term potential, but to get to that potential, you do have a lot of risk associated with it. You're in a steady decline. Overall, not favorable. HTGC. HTGC, good long-term potential, but more risk associated with that potential. You're basically moving sideways. No surprise when you look at that mini graph at the very top. Overall, stock is slightly below average for the time being. SENS, heck yeah, let's do SENS. I like this stock. Personally, I hold it. Been adding more, especially on that last dip. But poor long-term potential, a lot of risk associated with it. It is a speculative play. RT has been pulling back a little bit, so it is in a slight downtrend. You need to see that a new run starting to form. Overall, the stock is not favorable, but as a speculative play, knowing the stock, knowing what they're doing, it's a good play. Or if personally, it meets my criteria for my risk amount or my risk criteria that I prefer for myself. I heard some rumors that they were supposed to be announcing the FDA approval on their 180 day for what they do. Haven't seen, it was supposed to be on the 15th, maybe tomorrow, who knows? We'll have to wait and see, but that's really the thing that's been holding them back is the delays from the FDA approval just because of all the emergency approval stuff that's been going on over the last year. All right. But I expect once that approval gets announced to see this thing take off. All right. We already did SRNE, ED, or EGY. EGY, good long-term potential. More risk associated with that long-term potential, however. You have a really strong short-term uptrend. No surprise being an energy stock right now. Overall, stock's definitely favorable. KNTNF. Oh. KNTN. There we go. F. Good long-term potential, but a lot of risk associated with it. You're in a steady decline right now. Overall, stock's about average. You need to see that timing really pick back up to make it favorable here. FANG. Diamondback, great long-term potential. Less risk associated with this stock. You have a really strong short-term uptrend. Been one of the top VST stocks for quite some time now. Overall, stock's definitely favorable here. AAPL, Apple, good long-term potential, less risk associated with it. However, on a short-term basis, the stock is flat at a RT rating of 1.0. It's not going up, it's not going down, basically just treading water for the time being. Overall, good stock, but keep your focus on the RT for the time for now. Let's see, WYNN. WYNN, poor long-term potential, a lot of risk associated with it. Timing is basically flat, so therefore the stock is not favorable. ERF, good long-term potential, but does have a lot of risk associated with it. Man, look at that timing though. 1.9, a really strong short-term uptrend. Great momentum currently to the stock. So overall, stock's definitely favorable here. ESGC. Good long-term potential, but a lot of risk to get to that long-term potential. And a really strong decline right now. Overall, stock's definitely not favorable here. ZOM, poor long-term potential, a lot of risk associated with this stock. You're in a strong decline. Overall, definitely not favorable. BMY, there we go. Great long-term potential, but does have a little bit more risk associated with it. Unfortunately, it is in a decline currently as well, so therefore it's a good stock, but with more risk and a steady decline in price, right now is not the time to be long in it. All right, we'll do a couple of more here. STLD, great long-term potential, less risk associated with this stock. You're in a slight decline on a short-term basis. Overall, good stock, timing just not the greatest right now. T for AT&T. So good long-term potential, but does have a little bit more risk associated with it, which is surprising seeing the name. AT&T's been a solid staple for years, but with that lower RS rating that we've seen coming in over the last few years, definitely brings a cause for concern. It is in a steady decline, no surprise there. So overall, the stock is not favorable for the time being. EGO, and we'll do one more after this. So EGO, good long-term potential, but does have a little bit more risk associated with it. You're in a steady uptrend on a short-term basis, therefore the stock is favorable. And last but not least, CRK. CRK has great long-term potential, but a lot of risk associated with it. No surprise there, more of an aggressive play. You're in a really strong short-term uptrend, so overall the stock is definitely favorable. Do you go over options also? Not on these streams here because we don't have options data in the stock advisory app. It's just looking at the stock data. Personally, I love trading options, but we don't really talk about that here because it doesn't relate to the stock advisory app there. But thank you for your question. Is TSOI in VectorVest 7 yet? If it is in VectorVest 7, it would be here. TSOI, not yet. So I will say, Mark, typically new stock requests get added every Thursday at the close of the market. Today being Thursday means that if you've requested it, should be added in today after the close, which means you should be able to see it tomorrow. So as long as that request has been sent, you should be able to see that probably tomorrow, more so than today. All right, I said no more, but we'll do one more for you guys. PED, alrighty. PED, poor long-term potential, a lot of risk associated with it. However, you do have a steady uptrend on a short-term basis, overall making the stock slightly favorable here. Can you provide us your personal stock search criteria? Anthony, I use a variety of different searches and screens. So unfortunately there's not, certain set of criteria that I look for, when doing a search. I look at multiple different searches for different types of plays. I have some stocks that are more conservative, like my long-term holdings, are more high RS rated stocks. My short-term swing trades are more RT and RV focused. And my day trades are, low RV, RS, more speculative, aggressive trades. Really just focused on momentum there. All right, so let's go ahead, take a look at what's going on, see if anything has changed so far. We're still one tick into the green, therefore we're mildly bullish still, and VectorVest advocates caution when buying stocks at this time. If we scroll down, we still have that green light in the price column. RT pulling back a little bit, I believe, if I'm not mistaken. From where we looked at yesterday, or from where we looked at the very beginning. Buy to sell ratio still staying right below that level of 1. Looking at advanced declines. Advances have pulled back a little bit, now at 67% rather than 69%. Decliners are picking up a little bit from 20 to about 22%. So we're seeing a slight pullback in the market for the time being. Looking at the Dow's up still about 1.4%. NASDAQ's up about 1.4 as well. So NASDAQ pulling back a little bit there. S&P's up 1.4. VectorVest Composite up 1.1% so far. PD is the stock you went over. Okay. So where was it? Now you reminded me there. That's the thing is when I say, Robert, that, once I'm done with a trade, I could care less what happens to it afterwards. This is proof of that. I traded it apparently in a jockey club at 2. Oh, this was the one I stayed for longer on Tuesday. Okay. Yeah, I'm glad we got out of it. Glad it was just a day trade. It wasn't a swing trade. Made our gains and moved on. So, but yeah, that just shows that, once I'm done with the trade, I'm done with the trade. I don't think about my trades afterwards. I treat it as a non-emotional process, more of a systematic process. And that's what we want everybody to be doing here. So hopefully that helps you guys out and helps shed some insight into that as well. All right. So thank you once again to Jay. Thank you, Judy, for those stars over on our Facebook page. Thank you all for tuning in here today. If you've enjoyed today's session, as always, if you haven't already hit that like button, go ahead and hit that like button now. Share this with all your friends, share this with all your family to help me continue to grow this awesome community that we built over the last few years. Because, when I first started, we had maybe 10 people every session. Now we're looking at closer to 200 people almost every session. So it really has been an amazing experience getting to grow with you guys, helping you all become better traders, better investors, because that's really our goal here. We want you to be able to become financially independent through the use of the stock market. And that's what we try to do every single week with our live streams here. So thank you all for tuning in. I hope you all have a great weekend. Be safe out there. Take care. And I'll see you guys next Thursday at 11 a.m. as we kick off our next stream. So until then, take care. Adios. Toodles.